In 2017, one man convinced the world he could see the future. Not metaphorically, not strategically, literally. Masayoshi Son believed technology would reshape humanity faster than anyone imagined, and he believed he was the only one bold enough to fund it. So he raised $100 billion, not for one company, not for one industry, but for an entire vision of the future. This was the Vision Fund, the largest investment fund ever created, and it would change Silicon Valley forever. But instead of creating the next generation of innovation, it left behind something else. Distorted markets, inflated startups, spectacular collapses, and a question venture capital still hasn't answered. What happens when there's too much money chasing the future? Before we dive in, a quick note. We see this a lot. Many people watching these documentaries haven't subscribed yet. It's a simple, free click, but it helps this channel more than you might think. It allows us to keep researching, keep telling complex stories like this, and keep producing long-form investigations without shortcuts. So if you enjoy content like this, consider subscribing. Now, let's begin. This story starts with one man. Masayoshi Son isn't just a billionaire investor. He's a futurist, obsessed with what the world will look like decades from now. As a student, Son famously sketched a vision of the future so convincing that it helped him secure early backing. From the beginning, he wasn't interested in steady growth. He was interested in dominance. Son believed technology wouldn't evolve gradually. It would explode. Artificial intelligence, robotics, platforms that reshape entire industries. And he believed the winners wouldn't be the smartest companies, but the ones willing to grow the fastest, no matter the cost. That belief would lead to the creation of something the financial world had never seen before. In 2017, SoftBank launched the Vision Fund, nearly $100 billion aimed at shaping the future of technology. It was larger than most countries' annual budgets, larger than any venture fund in history, and it gave Masayoshi Son unprecedented power to decide which startups would live, scale, or collapse. The strategy was simple, almost reckless: grow at all costs, dominate markets, worry about profits later. And at first it looked brilliant. Money flooded into startups at a scale never seen before. Valuations exploded. Founders were encouraged to think bigger, faster, louder. But quietly, something dangerous was happening. The fund wasn't just backing the future, it was distorting it, and the consequences would ripple across the entire tech world. In 2017, SoftBank launched the Vision Fund. Backed by Saudi Arabia, Abu Dhabi, and global capital hungry for tech exposure, it instantly became larger than most entire venture capital markets combined. The strategy was simple and radical. Find companies with massive ambition, flood them with capital, and force growth faster than competitors could react. This wasn't venture capital as it had ever existed. It was venture capital on steroids. Startups weren't given millions, they were given billions. And when one company hesitated, SoftBank would fund its rival too. The goal wasn't efficiency, it was market domination at any cost. The Vision Fund didn't just invest in companies, it reshaped their behavior. Founders were encouraged to spend aggressively, to expand globally, to hire faster than systems could handle, to prioritize user growth over sustainable economics. Losses were framed as proof of ambition, discipline was framed as weakness. This created a dangerous feedback loop. Cheap money rewarded reckless behavior, and reckless behavior justified even more funding. Entire sectors became distorted, valuations disconnected from reality. and warning signs were ignored because the checks kept coming. Let's take a quick break before we continue. If the Vision Fund teaches us anything, it's this. Throwing money blindly at a system doesn't create clarity, it creates chaos. That's exactly where The Alchemist is different. The Alchemist is a transparent, fully automated trading tool that shows you exactly what it's doing at all times. It scans the markets 24/7, identifies high probability setups, and executes trades automatically. But you stay in control. No black boxes, no hidden logic, no trust us, it'll work. If you want a system built on visibility instead of hype, click the link in the description and use code SoftBank for 10% off. Now, back to the story of what happens when belief outpaces reality. Then came the collapses. WeWork, a real estate company sold as a tech revolution, imploded in public view. Its IPO failed, its valuation collapsed, and SoftBank was forced to rescue the very company it had inflated. Klarna, a construction startup meant to reinvent building, burned billions and vanished completely. Dozens of other companies quietly disappeared. No headlines, no documentaries, just capital erased. The Vision Fund wasn't accelerating innovation, it was amplifying fragility. To be clear, not every Vision Fund company collapsed. Uber still exists, Klarna still operates. On the surface, they look like success stories, but survival is not the same as success. Uber burned tens of billions of dollars before it even came close to profitability. And the Uber that exists today is smaller, slower, and far more disciplined than the one SoftBank tried to build. Entire markets were abandoned. Expansion was reversed. Costs were slashed. Klarna followed a similar path. Once valued at nearly $50 billion, it was forced into mass layoffs, aggressive restructuring, and a complete rethink of its business model when cheap money disappeared. These companies didn't win because of the Vision Fund strategy. They survived by abandoning it. SoftBank didn't create sustainable champions, it inflated them, and reality did the rest. When global interest rates rose and capital became scarce, the Vision Fund's model collapsed. Growth at all costs stopped working. Public markets demanded profits. Private valuations crashed. SoftBank was forced to write down tens of billions of dollars. Masayoshi Son admitted mistakes. The future he believed he could see suddenly became blurry. For the first time, venture capital had to confront an uncomfortable truth. More money doesn't always mean better outcomes. Sometimes it destroys the very thing it tries to accelerate. The Vision Fund didn't just fail, it rewrote the rules of startup finance and exposed their limits. It proved that scale without discipline creates bubbles, not breakthroughs. That capital can distort innovation as easily as it can enable it, and that intuition, no matter how confident, is not a substitute for fundamentals. Masayoshi Son wanted to fund the future. Instead, he showed the world what happens when belief outruns reality. The question now isn't whether another Vision Fund will appear. It's whether anyone will dare to repeat the experiment, or whether Silicon Valley has finally learned that even the future has limits. If you enjoyed this deep dive, like the video, subscribe for more, and as always, stay curious.